Hello, Cleveland, and everyone from everywhere else. I hope you're having a great day. I know I am. Why is that? Well, let's get into the charts. All right, so since yesterday, right around here, a little bit past there, we were watching as price action came back up to test 99.6. I was saying that had to break, hold as support for the bulls to push up, and that's exactly what they did. They broke back up over 99.6, held it as support here on the 90-minute chart, and are now playing out this bull flag that we drew. Now the bull flag plays out to 108,000. That is right around our just shy of our all-time high, and it looks like the bulls have a good chance of making it there. However, there are some downward pressures going on right now. What specifically? Well, if we look here at the stochastics on the 90-minute chart, we'll see that they are pointing downwards, showing downward momentum. Now, downward momentum means that we will see some downside. Now, how much downside? Well, price action could stay here up above 104, and that's what we want to see. We want to see price action stay over 104,000, this major support resistance level. I thought it would break right through, but it does seem like we're finding a little bit of a headwind here at that 104 level. RSI is showing strength, but I'll show it to you on the 6-hour chart here in a second. But yeah, if that 104 level can't hold, then we're going to have to expect a retracement. How far of a retracement? Well, let's just look at this move, this current move here. Well, that would show us a retracement back down to that 99.6 level, where, well, it could be above there. If it stops at the 618, we would see it retrace down to 107. But if it falls into that golden pocket, and likely that it does, the bottom of the golden pocket is that 99.6 level, that major support level. So if that 104 can't hold, then we're going to look for that 99.6 to hold, and for a bounce to occur from that golden pocket of the retracement level to then bring us up to complete this flag perhaps, but we could remeasure that as a new bull flag once that happens, if the bulls can't just find the strength to push straight up and complete this move now. Okay, let's move on to the 6-hour chart. So that 102 level is broken. Now, we were talking about how that would invalidate the bear flag. However, I'm going to change that, because if you take a quick peek here, if we move this, you'll see that right now the price action is struggling with the top of the bear flag, the resistance level here at the top of the bear flag. Now, if we had broken clearly out through there up to 108, I would call that completely invalidated on the bull flag. But because it did not, we're going to say that it's still there. So, yeah, bear flag is still there. The bear flag, not the bull flag, the bear flag. And if you look here, you'll see that this blue line is showing higher highs here on the price action, while this blue line that I'm about to draw is showing lower highs on the price action. Now, what does that indicate to us? That indicates a bearish divergence. Now, this bearish divergence, where could that lead us? Well, let's take a Fibonacci retracement of this run up here from on the 6-hour chart, and we can see that a retrace back to the golden pocket would bring us right back down to that 94K major support level. So, hey, perhaps that 94K support level will hold. Perhaps this 99K support level will hold. If we see the retrace, the bulls could find the strength to push on. But if they don't, and it's usually fairly likely that they don't, because we're seeing such distance between the 21 moving average here on the 90-minute chart and the price action. Same thing here, the 21 moving average and the price action are very far apart here on the 6-hour chart, and the same thing here on the daily. They're very far apart. So a pullback to the 21 is likely. Where is the 21 going to be? Well, it's going to be at different places on different charts. However, I would say that the 21 here on the 6-hour chart is going to meet up with price action here at that 99.6 level. So we're going to be looking for that 99.6 level to hold when we see this retracement. That would be the spot to get back in if you're getting out here. If you think it's going to keep going, hold steady, sir. Not financial advice. Do what you will. I'm going to get rid of this measured move from the bear flag because now the measured move is coming from here. And that would just bring it down to like 88. We're going to say we're going to get rid of this blue measured move because that bear flag from that like bear flag in a bear flag there didn't play out. So that's gone. Yeah, and we're seeing, you know, not so far down on the downside if that bear flag does play out. So bear flag not so worrisome now. Hey, what else broke out? Well, this downward descending triangle that we were showing on the daily also broke out from there. So that one also invalidated. Let's get rid of it. And what do we see on the daily now? Well, let's get rid of this too. That was like a measured move from this inverted head and shoulders that didn't quite turn into an inverted head and shoulders. It got too low on the second shoulder there. Does look like a double bottom. We were talking about that the other day, that this could be a double bottom, 1 and then 2, which would bring us right back up to that 108 level. And should it break out from the double bottom, well, then you measure that little middle ground W, and then you move that to the breakout point / the shoulder or whatever you want to call it, and that would bring us to 119. There's that number that comes up again. Where did we see it before? We saw it when we measured the bull flag from down here. We came up with that same 118, 119 level. Oops, back. That big bull flag on the daily there. So yeah, upsides. If we can see the bulls find strength and get up to all-time high and then break all-time high, the next stop is going to be around $119. Or $119,000. Should they find resistance here or here, then we're going to see the retrace like we're talking about. We're going to test it from here. So like we were saying, 99.6, that first stop on the retrace. If that can hold, if that's the bounce, hell yeah. If not, then the second 786 is what I meant to say, not 996 or whatever I just said, would be down here at the 94K level, just about. And should all hell break loose, we are still looking at this divergence here on the daily, which would bring us down to that 77 level. But we're less likely to get there now. Much less likely to get there now that we've broken 99.6, we've broken 104, and we're on our way up. But this bearish divergence here does have me concerned. It is technically just a potential bearish div because the RSI here could still pull up and invalidate it. But until it does, it is there and we have to mind it. Do I have anything else to tell you today? Not really. That's about it. We're looking for, you know, those drops to those levels. Hopefully that 104 can hold. And the bulls find strength here, pushing up all the way to 108. And hopefully after that, we just see them break right through 108. It's not the likeliest scenario. More likely, we're going to see a retrace down to the 21 on the 90-minute chart. And if that breaks, then the 21 here on the 6-hour chart, which, if you look at it on the daily chart, actually coincides to one another just about. 21 here is about 96.5. 21 here is at around 98. So pretty close together. Less than, less than 2%, 3%. Okay. Indicators. Well, we talked about that bearish div here, but we are seeing strength here on the 6-hour chart. The stochastics are stuck in overbought territory, showing 100 on the stoch over its signal line. That's bullish momentum. However, here on the 90-minute chart, we are seeing a turn down of the stoch, so they have not exited overbought territory. They are under the signal line, which indicates downward momentum. Let's take a quick peek at the 22-minute chart. Just to see where the stokes are there. Hey, look, they're kind of curling. They found bottom, actually a higher low, and are curling. There's a higher low here on the RSI as well, showing confluence with the price action. So, hey, these are turning up, getting over their signal line. So, hey, that could signal to us that the 90-minute chart stochastics are going to get stuck here in oversold territory, or I'm sorry, overbought territory. If they do, then hey, that's a great sign that this RSI is going to push up more and that the price action is going to push up more. Where? To that 108 level, completing this bull flag that we were talking about. Here on the 6-hour chart, we're seeing that divergence. We're seeing high stochastics in overbought territory. On the daily chart, stochastics are just getting into overbought territory. However, that bearish div that's on the 6-hour is not here on the daily. So the daily is showing strength and could continue pushing up. So even with, you know, a little retrace like we were talking about back down to 99.6, the daily could still you know, find support there, and that would be a higher bottom, which is what we're looking for. Another higher bottom after this higher top that we just put in. A higher bottom would signal that, hey, we're moving into an uptrend again. So that's what we want to see if we're retracing. And even if it gets to 96, that's a higher bottom. Even if it gets to 94, that's a higher bottom. However, if it does drop back down to 89, haha, that's no longer a higher bottom. That is a lower bottom, and we got to talk about other things, you know, like that bear flag still hitting, or this being the end of the bull run. But yeah, that's about all I have for you today. Let's thank you so much for watching. Music.
I didn't understand that.
Shut up, Bigsby. Thanks so much for watching. Music courteously provided by Veloa and Luminous. Check them out on SoundCloud. Much love. Peace out.